Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Today, now functioning with fully malfunction-free audio. At least I can hear me. So that's definitely a good sign. Welcome back. Today we are going to, there was a particular element I had in last video. I didn't have time to re-record yesterday after I got that up. But I do want to revisit some of the concepts that I mentioned there, particularly the IV dynamics that I had a chance to talk about, but of course, which no one had a chance to hear about. So I want to spend some time with that, as well as talk about one of the focal points in terms of some broader market analysis, kind of a hypothesis that I'm working with at the moment as I explore some of these newer technical indicators, trying to make sense out of the last couple months. And, one of the things, I suppose I'll get to this in a bit. We can leave that there, and then I'll go into deeper detail once we get down to our technical analysis section there. So let's hop into this today. A little bit of pre-market excitement always gets us always riled up, right? A little tiny, very, very long wick on a candle in pre-market or after hours always gets the people going, right? So let's pop over there. Let's do some of our hallmarks of gratitude here. First off, I do want to thank, because there was no audio, I do want to make sure I give a shout out to Jake for sponsoring yesterday's video and yesterday's newsletter breakdown. Just want to make sure I had the chance to do that. And of course, today, thanks go out to Anfrony. So thank you, Anfrony and Jake, for sponsoring today and yesterday's newsletter and video breakdown, as well, of course, to Dat Scruffdo, and to Ken Wedmerlin. Thank you both, for your continued support on a monthly basis, helping me offset some of my data expenses. Everyone who gives here to, everything that goes here goes on at 21st Century Renaissance, everything I do with this newsletter, all that I collect, goes to offsetting data expenses, to making this a little bit less of a little bit easier on myself, None of my content is monetized. Nothing is blocked behind a paywall. Everything that I put out, regardless of how much I get or do not get, is for everyone to access. It is all open access, of course. I'm very thankful to everyone, regardless of whether you express your gratitude through giving or not, is very much appreciated, since this is, a great way for me to be able to continue to develop my own understanding and see if we can understand this particular enigma in the market, and then be able to share that with others, which is a chief source of meaning in my life. So very grateful to that. Very grateful to everyone who's supported, either through contributions or through comments, through questions. Anything you have to send towards the research project here over at 21st Century Renaissance Open Interest Newsletter is very much appreciated. So thank you very much to everyone. So some very interesting stuff going down, some interesting DD out there, definitely, if you hadn't had the chance yet, go check out What Can I Make Today, or Twitter user What Can I MT, Reddit user What Can I Make Today. Recent DD, So What Can I Make Today has been pretty active over the past couple of months, trying to make sense of what's going on with these, these teleportations, this Frankenstein's monster of a chart, which we're going to see pretty shortly. The gist of the DD is such that we might be going through some margin call extension windows. Some of this weird price action that we saw, for example, back on February 14th, may have had to do with a margin call extension and deferral window that began back when, GME got shorted super hard. This first kind of out of the blue super hard shorting prior to the day that, the kind of 4-year anniversary day that that GME, or I should say day that GME went nuts back in 2021, the first day where most people would identify that the actual sneeze was in motion. It wasn't just a really strong bull trend, but it was something entirely unprecedented in market history. So I would definitely recommend checking that out. Some possible ideas, right, that we are moving into another one of these, that this might be coming up around March 25th, which is when we're also getting earnings, which is a date that Ryan Cohen's been pointing to, right? What does that have to do with Ryan Cohen's recent message? I'd also point you guys over to Otherwise Category 42's recent work regarding looking at YouTube metadata. As Roaring Kitty's been updating his videos. I mean, look, guys, it's been a weird couple months price action wise, but with all this being said, I think that the major players here, right, the Wombo combo themselves have really, they've not been sleeping on this. So interesting stuff. Give it a read. I think this week's live stream, we're gonna give it, we're gonna go into some deeper depth there. So do be sure to stop by. This week's live stream is going to be at Friday, 10 p.m. Eastern time this week. I know we've been a little erratic with the times while I've been in different time zones, but we're going to do 10 p.m. Eastern time this Friday after market close. So, all right, let's get into our stuff today. Main idea, right, we're probably going to end up, I would say, our most likely scenario, we're probably going to find ourselves closing in this $25 to $26 call gamma bracket, which we'll take a look. We'll break that down in a little bit. We'll see what that means, right, heading into the next couple of weeks. We are in this interesting IV appreciation ramp, a 4-week IV appreciation ramp heading into earnings around March 25th, March 26th. We'll see what that brings. That's definitely, I would say there's a strong suggestion that that means we're going to have some background buy pressure as a result of increased share hedging requirements due to those increased IV levels. So we'll break that down as well. I did have a chance to talk about that yesterday, like I said, which nobody heard because, you need a functioning microphone in order to do that, and mine may not have been. So, yeah, so we'll get into that in a bit, but that's kind of the gist for those of you that kind of only want to be here for 30 seconds. But I also want to take some time to go into some deeper market context here. So, right, so I'm always trying to develop my approaches to understanding what's happening. And the thing about GameStop, right, this is something that Richard Newton pointed out in his video, one of his videos earlier this week, right? GameStop's this rare opportunity. It's a unique opportunity in order to understand, like, what really are the more fundamental, like, what are the deeper layers of how to read the stock market, read markets in general, and how they're portrayed to us in the current age, like what's really going on behind the scenes. What are the real rules, right? He used I think he used the example of, was it Searle or the Large Hadron Collider, right? So the idea, if you want to figure out, like, what are the super deep laws of the universe, like, you put very, very small points of it under extreme pressure and just pack it with energy. And then, those rules actually start coming out. So GameStop, because of all this pressure, right, kind of acts like that in our current market, right? It's something like the Christ of the stock market, in the sense that, right, in the Gospels, right, Jesus Christ takes on the weight of all the sins of the world, right? So maximum pressure onto himself to reveal the fabric of creation itself, to reveal the road beyond the ways of sin and error and into the realm of eternal life, right? So there's a concept very similar written into, the divine story of Christianity. So GameStop, something like that. And so accordingly, I'm always trying to, use maybe different suggestions, take ideas. Hey, what are other people using in order to figure out really what's going on? And recently that's taken the form of taking a look at, Roaring Kitty's use of the price momentum oscillator. So looking at this at different time frames and just kind of seeing this in different contexts and seeing what it might reveal. Of course, I haven't had too much time. I mean, it does look to have some predictive validity, some non-random predictive validity from some of the back testing that I've done. But of course, still a work in progress here. But in terms of just kind of throwing some stuff out there, kind of getting a hypothesis there, what this seems to suggest, what seem to be some consistent signals between, elements in the market and in sort of prior bear phases, right? We talked about this a little bit earlier this week across some different time ranges for SPY. But, I had interestingly, earlier today, I did a quick little post on this on Twitter. But basically, if we take a look here, right, we can see that one of the signs of deeper correction, or one sort of element in these kind of double top formations, if we take a look, okay, so let's say something's in a bull market. Like, how do you really tell? What are the signs that a bull market is coming to a close, or it's going into a correction phase, that it's going to transition over into a bear market phase? And, the double top is a pretty consistent, the cat ear pattern or something like that, right? It shows up pretty consistently, right? And then the inverse as well, something like the double bottom to go back the other way. Somebody may have referred to that as like a horns pattern or something like that. Not sure. But in any case, right, this kind of doubling pattern. And it's possible, right, why does that happen? It may be the case that there is some sort of relationship with momentum indicators. Insofar as if we take a look, for example, at the Bitcoin chart. Now, why did I look at the Bitcoin chart? I took a look at the Bitcoin chart because we've seen a lot of, just kind of out of nowhere, all of this hype over the past week and a half about Ryan Cohen, right, dumping a bunch of money into Bitcoin. That sources say, people familiar with the matter, GameStop, right? We've seen MSM kind of walk up this narrative with it being rumors and then sources, and then a Peter Schiff interview where it was purposefully framed so that Peter Schiff would mistake what was a suggestion or rumors by sources as an announcement for the company, that then would move into, right, the very next week. I think last Monday we saw, right, this went from rumors to sources say to a company announcement to GameStop's plans to invest in Bitcoin, all from essentially a single tweet from Ryan Cohen, just a picture hanging out with Michael Saylor. Not even hanging out, just like they were in the same place and they took a picture. Of course, nobody said anything when Ryan Cohen took a picture with Sultan Al-Madid. That wasn't like, oh, is he investing in Qatari oil or something, or is he investing in Middle Eastern tech? Like, nobody did any of that. But of course, it's Saylor, so now we can use this to try to do Bitcoin, right? So I decided to take a look at this because I was like, man, this is too conspicuous. And then yesterday, right, we got this letter from, or 2 days ago, we got this letter. No, it was yesterday. Letter from Matt Cole of Strive Asset Management, whose shareholders, right? So whose shareholders own like a total of, across all the ETFs that Strive has for its clients, I think like there's something like 2,000 something shares in all these ETFs of like cash guaranteed like IOUs, right? Because that's how ETFs work. They don't actually have to hold the securities. They can just say that they hold the securities that they say they have, and then just like have a cash deposit as like collateral for it. So I wanted to go take a look at this whole Bitcoin thing and just see, like, is this serious? Like, is Ryan Cohen serious about this? Is this really what's going on? And so I kind of marked up this chart and took a look at, say, like, okay, like if we take a look at Bitcoin, say, right, back going into the bear market in 2022, 2023, we can see, okay, Bitcoin topped and then it kind of corrected down. And it corrected down as we have the price momentum oscillator. So we've got 3 signal lines here. Well, there's really 4. There's a 0 line, and then we've got a 20 moving average, a 35, and then what is this? I guess 0 line would be 10 or something like that. And then we have a 55. So this is what Roaring Kitty adds to it, and a 55 moving average, which uses the PMO closes as its source. So Roaring Kitty, I don't know, it seems like, right, these crosses tend to be advanced bearish signals. Now, they're not perfect, right? So downward crosses tend to be advanced warnings on bearish signals, upward crosses, advanced warnings on bullish signals, something like that. But what's really interesting here is if we zoom out to the weekly chart on sort of this bull trend, right? Because you think like, okay, in hindsight, everything's clear. But how can you recognize things going forward? How can you use this as a forward predictor? So if we see, right, we saw Bitcoin topped back in 2022, late 2021, early 2022. We had something of a correction. But as this occurred, right, we did get some bearish crosses on the two shorter PMO lines. But of course, while that was occurring, even though we got these crosses, we can see that the deeper 55 simple moving average on the PMO was still, right, momentum was still moving up. And so midway through this, right, we got a reversal. We found technical support at the 50 SMA on the actual chart. And then we started to move back up again. But crucially, right, these momentum lines did not, even though we got a cross back, they didn't make it back up above the 50 SMA. And when the 50 SMA, right, when it evened out and started to tick down, that's when we kind of moved into this deeper bear phase. And then we got some deeper crosses of these moving averages, right? So the crosses kind of occurred right around the time that we got crosses of our moving averages, bearish crosses of our moving averages on the actual chart. So what does this suggest? Well, it suggests, right, we can actually have price move higher even though momentum is going in the opposite direction or is starting to go in the opposite direction. So it's something like what it looks like what the momentum oscillators can help us identify is they can help us identify what is sort of weak, like a weak move to the upside versus a strong move. So this earlier top, this first top in Bitcoin, back in like the end of 2021. So this would have been something like, what would this be? This would have been in like the 60 something thousands, something like that. Right, this started to move to the, right, so it moved off of this high, but this was a very strong top, right? And we had a lot of momentum kind of built up from this that continued to carry us back up to this high, right, up here. So we actually logged a higher high on this original kind of momentum wave, even as the shorter term momentum wasn't really building up to counter it. So when shorter term momentum, right, couldn't get another wave to kind of top the previous momentum, then it was okay, time to sell off. And so that's when we got the deeper sell off into this bear market. We saw something similar actually over on SPY, although SPY is not quite as volatile. So if we head over to SPY, right, we see something like this, right? So something similar, right? Kind of a top here, kind of a first top in this area. Get a small kind of correction, right? It's not as wildly volatile here. When we got the first cross, but SPY doesn't really start to capitulate, and in fact, it logs a higher high, even as momentum is starting to move down. But it's not until that deeper momentum signal, that 55, which Roaring Kitty adds into the price momentum oscillator, do we then actually get, that's our signal to really kind of get some capitulation. And we see something similar here, right? So momentum, shorter term, has already been for a couple months, already moving down. Now we just logged a higher high, but we double topped. We had a top kind of back here. We had a correction when we had this bearish cross, moved back to the upside, got the higher high, but now, right, yesterday actually was our first official day, which renders this week, this weekly candle, this would be our first weekly candle moving definitively to the downside on the PMO chart. We're starting to do that. This is the beginning of that momentum moving to the downside on that deeper momentum indicator. So if this holds up, right, this would suggest that, okay, yeah, SPY is actually going to go into a correction. Maybe it doesn't go as low, right, in terms of the absolute value of the price, or not absolute value, but the value of the price. Maybe it doesn't go all the way down. But right, maybe it's a correction, a pretty sizable correction down to something like 470, right, over here on the 200 SMA. And we see a similar development up here in Bitcoin, right? Top, bearish signal, small correction, then little bullish signal, we get a new high, right? It's actually higher than the previous top, but momentum does not match the previous momentum, which got the first top. And so now we did, right? We've already gotten that first signal where the shorter term momentum indicators did not cross the deeper one, and the 55 is starting to curl down, which would suggest we correct down to something like, I don't know, 44, 45,000, something like that. Now that's, we're still way at the top of this. We've already come off the top quite a bit, but this is certainly suggesting that maybe over the course of the next, I don't know, 8 to 12 months, we could see something like a deep correction like that. If that's the case, right? And of course, I wouldn't put this past MSM. Why all of a sudden start shoving all this Bitcoin stuff to GameStop investors and say that, make up plans? Like, look, I'm not necessarily bearish on crypto. I have nothing against crypto. Like, I don't know. Maybe it goes to $1 billion. Like, whatever. I don't know. Like, I don't have a thesis against crypto. I'm not, perma bear. Peter Schiff just being like, oh no, it's the worst thing in the world. Like, it's worthless. It's completely worthless. It has no function. Look, man, I don't know, right? I don't heavily invest. I don't do too much attention over to cryptocurrencies. It doesn't mean that it doesn't have value. That's just not where I apply my attention. But just looking at the chart, right? If this is a valid forward predicting indicator, then if this is the pattern, then yeah, that looks like, and of course, I'm always suspicious. I am permanently suspicious of whatever MSM is putting out, and that just kind of strikes me as, trying to drum up exit liquidity. That's what that looks like to me. And so, we can see the pattern on Bitcoin. We can see it here on SPY as well. So, what would that necessarily look like? I mean, here it meant, kind of weeks down and then kind of weaker snapbacks up, and then a couple weeks down and then weaker snapbacks up, and then a couple weeks down and then kind of weaker snapbacks up. So and then kind of into it, we got some bigger movement. So it wasn't too obvious at the start of things that, bigger capitulation was really in store back in 2022, 2023. Right away, it kind of looked like, oh, okay, is it going to be one of these types of dips where we kind of go just to the 20-week moving average? And we haven't really dipped too far below that. Like, if we head over to SPY here, right? Let's bump out to a week. Huh? Everybody loves charts. Little chart time. Let's fix this a little bit. Shrink this up. There we go. So, we've got some of these smaller little guys here. Yeah. But again, right, the difference is, well, this is interesting, right? This is interesting because this tells something that the moving averages and this tells something that the moving averages and the price itself does not, or volume, right? It doesn't tell the same story. So yeah, when we really get in here, we can already see, we crossed that. I pointed that out earlier in the week. We crossed that SPY threshold a little ways ago. We don't look to be coming back anytime soon. For this to kind of round back up here is going to take something like, what is this? A couple months if it's gonna bounce back, right? And if you look at these other corrections, right? Look at these other corrections in here, these kind of smaller ones. Look at what happened with our momentum indicators. Very different here, just a kind of little whoop-de-doop, and then back we go, and then whoop-de-dip, and okay, some weakness, but whoop-de-dip, we're back. And then when we hit this all-time high, not the same. And then, of course, the gap is narrowing here until we get to this point where we cross below. And now this, for the first time, right, if we look over here, moving down, right? So just ever so slightly. You look at there on the left, right? Last week, 4.58, previous one, 4.57, 4.56, 4.55, right? So just a little bit. And then now we actually start to move down, 4.57 so far this week. So, we get a little whoop-de-doop here. We're still hanging out around that 20-week moving average. But, if this ends up holding up, right, if this indicator ends up holding up, then what we should see, I'm guessing heading into March OPEX, basically, is we hop on down here toward the 50 the 50-week moving average, right? So something like this. Just kind of fall through this, but then rather than coming back up, we fall down through it maybe pretty hard. Now, here's an interesting thing. That is also going to line up with the Bank of Japan. That's going to line up with the next element of the carry trade. Investment actuary has actually been pointing this out to me recently. Investment actuary has been monitoring the U.S. dollar to yen rate, and has suggested that it's very possible, based on what we're seeing right now, that this is already the next phase of the beginning of the yen carry trade unwind. So March 18th, 19th, we're getting another Bank of Japan decision. It's possible Bank of Japan will go ahead and hike up rates, right? So if they're hawkish on inflation, then that might be used as the catalyst to kind of send us down a little bit deeper, send us down here, right? So this was the last time we had one of those. That was a really big correction. Yeah, this here this is 23. Sorry, this is 23. This is this one that dipped below the 20 week. This was the last time that something got blamed on the yen carry trade. Right, we could see something like that. That's just 3 weeks away. So we could see this kind of head down into that, and then kind of, maybe it shoots even below this, and then we kind of come back up and then don't make it back up to the 20 week, or just kind of come right back kind of up above the 50 week for a little bit, and then resume basically our trajectory downward. Maybe we get because it'd be up here, right? Maybe we shoot down and then use it as a, lots of things could happen in this area. But if our momentum indicators hold up, then that's basically what that would suggest. So, playing around with this, I wanted to put this on your radar. It's certainly on my radar. Would be very interesting if this does, in fact, play out like that as our broader market context. Now, okay, right, what does that mean for GameStop? Well, for GameStop, that's not a great context necessarily to be trading in. In fact, it could, right? We might have something of a narrow window to maybe make something happen a bit more dynamically to the upside. So we'll have to see. We'll have to see. We look like we're moving a bit. Wait, where do I want to go here? This is where I want to go. Moving a little bit to the downside here today. We'll get into some of that in a bit. But if we look over at our kind of SPY options data, right, we're still kind of not super stable. The stable region above us in terms of options gamma, not looking awesome, right? So it's like, even as we've kind of recovered up here, there's not a lot to keep us in this area. So even though it's not crazy volatile, we can just kind of slip back down here without, there's no reason why we wouldn't if options flows start going that way. And then we've got some big volatility triggers at 595 and 590 that'll just kind of send us down there if we flip across them. And then as we look farther out, right? So heading into tomorrow, big put heavy gamma expiry, right? Definitely doesn't look bullish. Maybe then kind of early week we get a little bit of recovery based on how some of this is concentrated, right? Monday looks like people are betting on a recovery from this. Even heading into today, like we didn't look super bearish. But then as we kind of go out weekly expiries, the weeklies don't look great, right? Especially into March OPEX. That's bearish as heck. April 2 is kind of forming up slowly, but also not looking bullish right now. So basically March and into April is looking like bear land. So it has looked like institutions have used as we've seen multiple times, right? Have used this type of context in order to move GameStop's price down. So definitely worth monitoring in that sense. Yeah, maybe if we get some margin call type stuff per, what can I make today? Suggests maybe that kind of overrides some of that bearishness, but not a sublime context, I would say. Here's hoping Ryan Cohen has something up his sleeve for the market on earnings day. Yesterday, right, it really looks like most of our price action over in GameStop was just kind of driven by ETFs, maybe replenishing the shares of GameStop that the market sell-off forced them to get rid of. And then we can kind of see, right, what is related to SPY recovery, what is related to market recovery, and what is not, and what is price loss from this kind of price engineering, which is, I guess, what I'm calling a combination of things like strategic fails to deliver, tactical shorting, and order flow rerouting. Maybe we can put ETF shorting in there in the same breath, but something like that, right? Very, very low volume day, 3.2 million. And then, of course, we don't have it in this chart, but then we got this big candle, this huge shot up to 2620 today, and then right off the open, big fun sell-off. So not sure what's going on there. That also looks like it's correlated with SPY, right? SPY's kind of heading back down there. So yeah, under these conditions, we're having some pretty heavy correlations with SPY, and then it looks like institutions are just kind of piling on with their classic bag of tricks. Let's call it bag of donuts. I want to call it bag of donuts. A bag of donuts sounds like something that you would lay on somebody, just like take these donuts, you stock. We'll try it. We're going to workshop it. We'll see how it plays out. Yeah, very low volume. No, right, options volume, not interesting. Nothing really going on borrowing-wise directly. I mean, they're like not being touched. XRT did go on reg show, which is interesting, which means that for the last 5 days, it has had at least 10,000 fails, which have been unable to be cleared. So that's the reg show threshold security list. If you have a security which is unable to clear its fails for to get below 10,000 fails for 5 days in a row, then it goes on the threshold security list. And then I think the settlement and fail clearing requirement shorten up. So you end up with like 13 days to do it as opposed to like the customary 35. I'm not sure what that matters. I misspelled principles there. I have to fix that. I outlined technical things. One of the hard things, right, with GameStop in these conditions is that it's kind of shirking a lot of technicals. Technicals, right, we've seen this before, but every time it looks like a technical situation is going to reemerge, it just kind of flaunts it. So, I sketched up a little thing there. If it does the thing I described up above, right, if GameStop's weekly behaves, say, like SPY's weekly or, Bitcoin's weekly, maybe we get this kind of double top formation here, something like that, heading into kind of the summer before a kind of another cool off sort of phase. We'll have to see. We'll have to see what that looks like. I'm not going to get too invested in that, but one of the things that is a little bit difficult, right? And why I guess I'm not really pushing too hard with technicals at this point, certainly not as I was in this bull channel or as I was before that, is because we had this kind of one event. We had this one teleportation event, but everything else in this channel, pretty regular, very respectable in terms of its technicals, very easy to trade this in terms of, hey, I bet you this functions as a ceiling. I bet you this, right? And just as you go along, it ends up working pretty well as far as being able to use technicals in combinations with options data as a forward predictor or price action. Here, right, we just get this kind of Frankenstein's monster of a technical setup where we have these kind of emergent patterns, right? And you can see this, right? Because like it has detail, it has depth. It has, it goes up and it doubles back and the candles, right? there's a deeper complexity under there. Whereas these are lines, right? Like there isn't a deeper complexity. It's just somebody goes, it will go down, and then it does. This is, you end up with these very irregular, right? So it's something like I've described this before, right? Price action, market, stock. It works like a complex system, a formal complex system. It works like something like a whirlpool, right? So if you have a whirlpool, you have an eddy, right? It's kind of circling down the drain, and it establishes a kind of equilibrium, and it goes into its own patterns, and it's asymmetrical, right? It's dynamic and asymmetrical, but it has its own patterns, and you can sort of follow the patterns, and you can, okay, cool, and you can watch it as the water circles and things go down it, and okay. But then as soon as you stick your finger in it, the whirlpool dissolves, like it disappears, it shatters. And then if you leave your finger in, okay, the whirlpool will come back until you remove it again. And so that's right, that's an emergent system. That's like, a formal complex system is like emergent from chaos. It has a property of spontaneous order. So you have chaos, you stick your finger in, you do this linearity, chaos. And then spontaneous order coalesces, and then the natural rhythms flow again. But basically, every time here, what we're getting for a couple weeks, right? We had, okay, moving in here, and chaos, right? Send the system back into chaos. Just send it back into chaos, right? To disrupt this whole pattern. And okay, and then we get, okay, it's back, spontaneous order. Here we go, spontaneous order and chaos, right? Dissolve the system. And then spontaneous order again. Spontaneous order, right? Waveform going up, right? And you can see it kind of waves like this. It's not this quick, like whoop. And even here, right, when we correct down, it's not, it doesn't move quite like this. It's not as abrupt. Or if it is this abrupt, it's abrupt as equally as upwardly abrupt as it is on the other side. We don't see that, right? We just see this abrupt move down. Okay, maybe with the exception of this candle, which is, I think, what can I make today was suggesting that this candle, be altimeter as well, this candle here, right? The reason why this candle was so crazy and abrupt is because it was this internalized order, right? It was this buying that was internalized, that disappeared, strategically failed to deliver, as otherwise category 42 would call it boofed. And then it reemerged here, right? It had to be bought back. So these are present sellers, but future buyers. Present sellers, future buyers, right? So they come in. So this is, and this I think was, what can I make today was suggesting that this was something like 20, right? This would have been 29 days. So January 13th, yeah, 29 days. 29? No, would have been 29 from the 15th? No, yes, no. Forget the number exactly, but it's pretty close to a 29 day, but they're holiday exemption, right? Martin Luther King Jr. Day and President's Day. So it would. It would. From the 14th, which this happened on the 14th. And then this was the 13th of February, right? So 31 days between those, 31 days, 14, 30, that would be 30. And then back off the 2 holiday exemptions for MLK Day and President's Day, right? I think that should shake out like that. Maybe just MLK Day, because President's Day was afterwards. So that's exactly 29 days. Yeah, if you exempt that. Yeah, so that's what this was, right? Okay, that's a suggestion anyway. So we're still waiting on this. So this date, when was this date? When was this candle? Let's just do it live. We'll do it live here. We'll take a look at this. Maybe, I know, I'm making this a longer video than I thought it would, but I don't know. Maybe you guys like this. You can let me know down in the comments, provided you can hear me. I'm sure you can. I'm looking at the microphone. It's working. Let's share this tab instead. Hop on in here. Yeah, so I guess it would be this gap down. So 31st. So that would have been, yeah, 2 days after the Citadel swaps from 2021. All right, because the 29th of Jan was the Citadel swaps from 2021. So yeah, 2 days later, we got that. So, okay, so if you do another one, maybe do a 29-day extension, should put us, okay, so back off. Yeah, that should put us, yeah, at today, right? So I wonder, what was the price then? The 27s, and it went down to 25? Right over the weekend, that's what that was. Yeah, so that basically puts us at around today. So maybe that candle we saw today early was some of that volume, but it looked like very low, right? It was not exceptionally high volume we saw there. At open, yeah. Looks like maybe it got shorted right off the open. But it's like 20,000 shares. So I don't know. It's wonky, you guys. This stuff's definitely hard. They're bringing out all the tricks. Charts don't look like they're supposed to. So yeah, I mean, this stuff's got to show up somewhere. Maybe that's why, I don't know, we're seeing this track back down today. How much of this is coordinated with SPY? Hard to say. But anyway, right, this is why I'm not trying to do too much with our technicals here, just because, I don't know, you can't, these moves, right, they just pop up, you know? And then you can go and, you know, like I dragged the bearish regression channel afterwards, but it's not like it makes sense like in the moment. It looks like it in hindsight, right? So like if I were to drag the channel back there, like you wouldn't say like, oh yes, this is going to happen in this many days. Right, we had basically broken out. We broke out of the bearish channel back here. We broke out. We were going this way. And then, nope, and then redraw the channel, and then up, there we go. Okay. So now we have another little emergent eddy there, but how long is that going to stay? I couldn't tell you. So if we go take a look at our options data, what are we looking at? OI data, not too much in the way of anything exciting going on. These 25s were pretty mixed. Everything was pretty mixed sentimentally. Right, we had a neutral options day yesterday. The one kind of interesting order was we had 4,000. Somebody sold 4,000 calls here at $30. Excuse me, $28 for March 31st. So I don't know. One trader is like, "Yep, just gonna sit back and collect some premium. That's what I'm gonna do." So, okay, enjoy. We'll see how that shakes out. Max Payne's either at 25 or 25.50. Not sure. Chart Exchange, Max Payne reporting some different values. If we look at our gamma exposure, okay, so we're seeing some of this now, kind of moving down through here. We do have this put gamma kind of stacked up at 24, but below us it's kind of uneven. Like this is what I commented yesterday in my video. Again, you didn't have a chance to hear this, but you know, kind of uneven. It's not like the previous day where like 24.50, 24, 20, like 25, like this was all kind of a solid block of red from like 25.50 down to 24. And so it looked like, yeah, we're just going to slide if we move down and then run out of steam at 23.50 between, you know, below 24, 23.50. This, right, we still don't have that. Like, okay, 24 helps us slide on down, but 23.50, not so much. There's just not really a lot there. So maybe we go all the way back to like the 23.80 something level. 23 is kind of negative, but they'd probably, this is what I said in yesterday's video. They'd have to then go ahead and maybe borrow like a couple 100,000 shares at 23.50 and kind of shove us through there to really make that happen, which they could do. They have the shares to do it if that's what they want. Yeah. So, I mean, we have so much call gamma ahead of us. We're back again. Now we're back. We're moving into one of these situations now with the price where it is that we've got like 99 point something percent of our calls out of the money. So, you know, that whenever I see that, like that kind of just screams like that's not a natural distribution, right? Like um, how do you end up with over 99% of all of the options contracts? Oh, I should say not all the options contracts, all of the calls end up out of the money? That's a good question. But if we do see something today or into tomorrow that kind of moves us back to the upside, right? So I think we'd kind of, unless we get options that kind of fill in here around 23.50 and heavy shorting, then I think we just, if we move down, we kind of do the same thing we did earlier in the week and then kind of move back up. And then if we do move back up, I think the farthest we kind of get is really to move into this 25 to 26 kind of area. Maybe they're just trying to bait call gamma like here at 25 so that we get stuck under it. But maybe they're doing another gamma ramp thing. Maybe they do a Friday gamma ramp thing where, we saw this would be back 2024. This would be the September. Yeah, this would be like September 20, right? This is like the September 20 gamma ramp. So we were just below $20. Lot of put and call gamma there. Just below it, hanging out in the 24. It would have been 1950 as opposed to 24.50. And then we got forced down there. It looked like okay, we're going to start to recover, but then nope. And I think I used the meme like I said, we closing at below 20 today, something like that, right? That meme. You know the meme. You know the meme. And so, maybe we just hang out in this kind of region here. Maybe we walk down a little bit. And then if they've got something like, what would it be? Yeah, if they've got actually, right. If they've got all of those internalized shares that they've got to close, like again, maybe that was part of that volume this morning. Maybe that was to make it look like that stuff getting covered. I don't know. It doesn't look like it doesn't fit the volume profile. But maybe then that gets covered tomorrow. Like maybe, heading into later today, maybe they wait to do it midday. Maybe they we move into tomorrow and then we get kind of a big candle where we get however much volume that was. Maybe even if it's 5 million shares, right? Like based on this distribution of our gamma, plus we've got IV in the background, like IV is creeping up because we're 4 weeks out, right? We're 4 weeks ahead of earnings, but IV is already creeping up. So that's something I went into some deeper depth yesterday talking about. I see this video is already 45 minutes, so maybe I'll just break this down on the live stream. I have this over in the article, but basically, just very quickly, market makers under these conditions, IV is ticking up. They're going to have to buy more shares to cover all these calls that are out of the money, right? So this is the Vana effect. So Vana is the change in delta per point of vega. So as IV goes up, as the IV value of a contract goes up, its delta value also goes up as well. So if you see something even like you see from what basically our baseline should be, were we not experiencing this earnings effect, our IV should probably be around 70 or 75. We're not doing crazy stuff. Yesterday's volume, yeah, was 52-week low volume. Like we should have had 52-week IV basically around that. Our price, is down, but our IV is up. So if we were to, I would say on our previous 2 quarters, we moved up to about, well, Q3 we had some other factors too, but Q2, right, we moved up from basically being around 70 something, low 70s. We moved up to 100. Yeah, we moved up to like 120% prior to earnings, I want to say. So last year for Q4 earnings in 2024, in March, we moved from like a low of like 69 in early February to 212% on not that much price movement. So even going from 75% up to 120%, you would see an at the money call go from like being, let's say a $25 at the money call, right? You'd see its delta value being 50.5. So the market maker would have to have 50 shares to hedge that properly, to delta hedge that, to remain delta neutral, to the delta value probably being somewhere from like 55 to 57. So 5 to 7 more shares they'd have to be holding on per contract. Now, as the contract goes more out of the money, the greater the Vana effect is going to be on the percent delta appreciation. So you could see something like, you've got a bunch of contracts, right? Like maybe they're $10 out of the money, right? Maybe they're 35s or 40s, and you see, right, tens of thousands of contracts sometimes open at these positions. And usually the delta is something like 0.1 or 0.15, but now you're adding, because of the Van effect, maybe you're adding like another 10 points of delta or another 7 points of delta to that, right? So if it's 10,000 contracts adding 7 points of delta, yeah, that's another, you're hedging, wouldn't that be, yeah, like 70,000 shares per just for that strike. Just for that strike, for that one expiry, it's 10,000 contracts. So if you average that, you say average, there's 100,000 shares per week, or 100,000 contracts per week, and you're adding 0.5 to 0.7, let's say 0.7 points of delta, right? So you're looking at 500,000 to 700,000 more shares that, as that IV is appreciating, that options market makers are buying to cover each week. And that's only assuming there's 100,000 calls or something like that. So my initial thought when I first noticed this was, maybe they're walking the price down. Yeah, they've got the FTD stuff, but maybe the options market makers are in on this too, because, or maybe the institutions who also have to cover these FTDs know that options market makers basically in these next 4 weeks are slowly going to be putting this mild buying pressure on the stock. And that could mess stuff up if you're trying to cover these internalized positions from several weeks ago, right? So interesting thoughts. Definitely go check out what can I make today, right? At the bottom, of course, my little thematic, right? So our cyclical theme here is, of course, right, full stack React, 10 plus years experience. Full stack React wasn't available. React wasn't available until 10 years ago, March 26th. So the day after earnings, right? Day after earnings, 10 years ago. So this job application, which was posted back on December 30th, would be impossible to fill until March 26th of this year. So, TA team at GameStop. Yep. So yeah, we'll see what things have in store right now. That's going on already an hour for this video. So this may as well have been a live stream, right? But we can break down some more of this when we see each other, on Friday. I wanted to make sure I got some of the stuff I talked about too yesterday on here, since my mic wasn't working. So we'll see, but definitely good luck out there, everybody. Go ahead, leave a comment, leave a question. Always love hearing from you guys. And yeah, we'll see you tomorrow. Cheers.